February-March paper 2024, the 22 paper, structured question. This one's again about errors and fixing up errors. So we've got our friend Sunita again, and Sunita, she's got a trial balance and has discovered some errors. So you can see there are 6 errors there. We have to prepare the journal entry to correct the first error only. So we'll put error number 1. And the thing to remember about errors is that the debits and credits must balance anytime we do a journal entry. So the error number 1, the total of sales returns journal of 3524 had been credited to the purchases account. So sales returns should actually be a debit figure because it's a negative income. So we're going to correct that first. So we're going to put sales returns in, and we're going to put 3524. The next part of the error, it had been credited to the purchases. So it shouldn't have been credited to the purchases. So we need to undo that account. So we're going to debit purchases, 3524, which will take that purchases from that back to 0 where we need it to be because it had nothing to do with purchases. And the last one is your trial balance won't balance because of this error. So remember to indent for your credit entry. And we're going to indent and we're going to write it to suspense. So this will help our trial balance to balance. Says a narration is required, so we need to write something. Correction of error, posting sales returns to purchases. Done. Question 2. Scroll on down. Turn the page. We've got here prepare the suspense account, including the balancing figure. All right. So Sunita's suspense account. Now this question is a bit nasty because we don't have the original figure, so we don't know if the balance is going to be a debit or credit. So we have to work backwards to find that. So we're going to have to work through each one of the 1 through to 6 and put them into the suspense account. The first one is well, we've got a couple here. We'll put here our purchases, the ones that we've just done on that previous entry, 3524. Just show you here, see how we credited suspense 7048, made up of these 2 amounts. So those 2 amounts we'll put into a suspense. And the next one is sales returns. $3,524. Alright, so we've put those 2 figures in, great. So then we're going to have a look at the next one. The purchases journal has been undercast. So we haven't put enough into that purchases journal. So we're going to have to add it. So we're going to debit purchases to increase it, to bring it back up. So we're going to debit purchases, the suspense we're going to credit. We may as well put the end of the year here. So it makes sense because it's undercast. We need to add the purchase plus the purchases and expense, debit purchase, credit suspense. The total of sales of this has not been posted to the sales account. Alright, so if it's going to be posted to the sales account, it's going to be credit to sales, so the debit must go to suspense. Alright, so if you can work out what should have happened, then we can add the next bit. A payment received from P. Mattel had been debited to the account of M. Patel. So it should have been a payment received from P. Mattel. So for P. Mattel, that should be a payment received. So it should be debit bank, credit P. Mattel. But it's been debited, so we've got 2 errors here. So we'll put both errors in. So firstly, we need to the PMatel. Alright, they shouldn't have been credited, so we've got to debit it to make it back normal. And then we've got to put it into MPatel. Capital introduced by Sunita of 5,000 had been debited to the bank, but no other entry. So it should be so it should have been credited to capital. So it should have been debit bank 5,000, credit capital 5,000, and the credit hasn't happened. So that's why it doesn't balance. So on this side we're going to type capital, because what we have to do is credit capital. That means we're debiting suspense. Does that make sense? Debit suspense, credit capital, so that fulfills that other part. And the last part, a rent payment of 500 had been posted to the rent expense account as 50 bucks. So we're 450 out. So we need to add it to the rent. So we're going to debit rent by 450 and credit suspense by 450. Alright, so these two accounts should balance. We know they're not, and that's going to be our opening balance, is the amount that's out. And so our balance at the start is going to be that one minus oh, that didn't work for me. So the opening balance at the suspense, the trial balance was out, was 17,085. Genius. So now that you've done that, they're asking you to correct the statement. So find the correct gross profit and the correct profit. Alright, so we're going to start off with that was the gross profit that we were given. And so we're going to look for any of these that impact the gross profit. So you see error number 1 here. So anything to do with sales or purchases is going to impact the gross profit. Anything to do with other expenses is going to be down here after the gross profit. Alright, so let's have a look. The first one, error number 1, that one there. What have we got? The sales returns. So that was put in the purchase account. So that's actually going to be, because you've got two parts of that, what do we got? 3, 5, 2, 4 times 2. Just thinking about whether we're going to add or subtract that one from gross profit. So sales returns has been credited. So what we've done, just check back over here. So sales returns is debited and purchases is debited. So we've basically added 7048 to expenses. So that's going to decrease our gross profit. Error 2. Sorry, we better just check error 2. Purchases has been undercast, yeah. So there's 90 bucks because we need to add 90 bucks to that. And because it's an expense, it'll decrease our profit by 90. Higher purchase, lower gross profit. Let's see error 3. In the sales journal, yep, we've got 19415 that's not been posted. Oh, okay, so that's going to increase our sales. So our sales are going to increase by 19415. 19415. Let's check error 4. No, that's nothing to do with gross profit, and neither is 5. So let's just add all those up. And that's our new gross profit. Our new profit for the year, we started off with this figure. And so we're just looking for adjustments here. This one here is nothing to do with profit. It's just one person that owes and another person that owes. So that's not going to impact that all. But this one here, that's to do with capital. So again, that's got nothing to do with profit. It's just fixing that expense account up. But this one seems to be a rent payment. So that's an expense. Has been posted to rent as $50. So what we're going to do is, there's a bigger expense. What do we call it? Error 6, increase in our rent expense. So we're going to minus 450. Just a bit concerned here that we also need to do the change in gross profit. So our change in gross profit is all of those added together. So we're going to add 12,227. So our gross profit goes down, up, so our profit for the year will go up as well. Good, so that's our new profit for the year. Alright, let's look at 5D. Done that. So Sunita's gross margin is 40%. We need to calculate the sales revenue. Here we go. Right, so gross margin, the formula for that, gross margin equals gross profit divided by sales. Alright, so we've got our gross profit is, so the answer is actually 40%, and we don't have a sales figure. So we have to work the sales figure out from this. So let's put in what we know. We've got 78,500. And what we're going to do is we're going to divide that by 0.4. Alright, so let's do that. Equals 78,500 divided by 0.4, and the sales figure is 196,250. Let's just check that's right. So if we go equals 196,250 times 40%, that should give us our gross margin, and it does. So that's your sales figure. Good. That's the end of that question. Well done.